I've bought another company. I'm once again a shareholder. I own more shares, which is fantastic. And what that means is I'm a shareholder. I'm one of those people that they talk about on the news when a company has to report to its shareholders or is responsible to its shareholders. I'm that person. I'm one of those shareholders. What I'm going to do now, I'm going to jump straight on my computer. I'm going to show you what I've bought. I'm going to show you the status of my account. And I'm going to go through a few companies that I've looked at and I haven't invested in right now. But let's have a look. Let's get straight on my computer and let's have a look at the state of my account. In my last video, I explained that I was standing at £236 and now I'm at £232.52, which means my assets, my net wealth has gone down by £4, which is not good, not ideal, but that's just the game we're in. As I said, I have bought another company, and what I'm going to do is I'm going to go through all the companies that I've looked at with the view of buying and explain why I did or didn't buy any of those shares. So the first one I looked at was Marks and Spencer's. So in August, Marks and Spencer's was in the FTSE 250, so it's in the tier below the FTSE 100, and it was promoted to the FTSE 100, and I really thought it was a good time to buy, but I didn't because I thought it was a bit too much risk. And it did go straight back down again, but since then it's recovered nicely, and I would have made a nice tidy little sum on Marks and Spencer's, which is a shame, but you win some, you lose some. The next one I thought about was Lloyds Bank, and I seriously considered Lloyds Bank because I think it's a really undervalued bank. The only reason I didn't do it is because I've already got a bank and I didn't really want to have too many of the same thing. So I'm keeping an eye on Lloyds Bank, and if I sell my NatWest shares, then I'm going to look at buying into Lloyds and get back into a bank again, because I think of all the banks that we have in the UK, Lloyds is the only one that hasn't properly recovered from the political challenges we had last year. So that's definitely something worth a look. BAE Systems was another one that I looked at carefully. BAE Systems make weapons and stuff like that, and with the Ukraine war and all the things going on in the world at the minute, BAE is a solid company. However, everyone else has bought into BAE, and I think it is quite a high price. I think it's slightly overvalued. So I'm not buying it now. I'm going to wait until it drops off, and once it drops off, I'll look at that seriously. So they're the three companies that I didn't buy, but the one company I did buy was National Grid. So I bought this yesterday. I would have done a video yesterday, but I didn't get the chance. But I bought 5 shares at just under £10 each, just under £50, plus £25 stamp duty. And of course, as soon as I bought these shares, they went straight down in value. But they didn't go down nosedive, but they did drop a lot. But since then, today, they've recovered quite nicely. They've recovered over 2% of their losses from yesterday. And my expectation is that eventually they'll go up. Now, National Grid is an amazing company. It's a monopoly in the UK, and it runs all of our power lines in the UK. But it's also got a huge stake in the east coast of the US, and it's got lots of other business in Europe. It's a kind of monopoly company. It's just, you can't go wrong with this company. In addition to that, you get lots and lots of dividends. So if this company does go down, I'm expecting to recoup a lot of the money I paid for it in dividends. So it's a no lose stock to have, really. It's no lose share to buy. So I'll keep an eye on that. Obviously, already I've lost 10p plus my 25p stamp duty, so that needs to go up a bit before I sell, and I expect it will. The rest of the stocks I've got, PayPal, I've got a small stake in PayPal. That's had a good day on the US stock market yesterday, so it went up 1.41. Imperial Brands is the one that I'm looking at closely. I'm nearly down £5. That's quite a large number. It's like nearly 10% down. I guess lots of people would get really nervous about this and probably want to cut their losses and sell off, but I'm not in that game. I'm in the slightly longer game when it comes to the stock market, and I'll just sit on that share until it regains it or gets me £2. The nice thing is that they do dividends every 3 months, and I'm expecting to get a 65p dividend for my 3 shares, which isn't much, but every dividend I get is going to help regain that cost. And then when it does go up, that would be a really good share to have. NatWest Bank is the next one, and that's been a bit up and down. I mean, it's a solid business. I can't understand why it's not doing better than it is. Obviously, it gave me that £1.21 dividend, and it's currently today it's on up 1/3%. But I'm only just over £1 down. I'm expecting that to go up eventually. So that's where I am. That's where my account is. It's doing all right. My net value's gone down, so I'm sort of not as wealthy as I was this time last week. But it's all right. I'm quite happy with that. And I'm hopeful that National Grid will give me my £2. I've still got another £50 to invest, so I'm still going to look at which company I ought to buy, which company is going to give me the best possible chance of getting my £2 return. Thank you very much for watching. I hope you enjoyed this video. If you did, it'd be really great if you could give it a like. And if you like this sort of content, this finance content I'm putting out, then I'd be super pleased if you would subscribe to the channel. That would be amazing. And that would give me the feedback that you're enjoying these sort of updates on my trading account. Either way, thank you very much indeed for watching, and I'll see you in the next one. Cheerio.